The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Let's get right into it. Let's talk about the Australian dollar. Had some news come out on this thing. And we're going to, we always seemingly talk about currencies more than anything else. But the way I look at these trading situations is you want to be in the markets that are really moving. That's where you can compress the time frames and hopefully ring the register a little larger than kind of hanging around with the General Electrics of the world. It's not going to give you the most immediate payouts on being in the market for a short amount of time. So these currencies are also making some very historic moves. The yen, Australian dollars hanging around these recent lows. We talked about this one in particular. I'm going to kind of go through the discourse here. Euro's doing some things we can take a look at today. U.S. dollar has technically had a little bit of a breakdown. Excuse me, I'm getting a little sick here. And let's just start with the Australian dollar. So as we look at the Australian dollar, this is kind of the transgression of events that's happened recently. And then we're going to kind of figure out what to do with it now. So we talked about this 75.96. I think we had 75.98. We talked about that yesterday and the day before. So again, met some targets down below, had to kind of sit tight and wait. When we hit these strong longer-term inflection points, these are battle lines, basically, is what they are. So, are you supposed to kind of hope and dream that they fall through there? I think we're ultimately going to see lower lows on this, but right now you got to kind of take what the market gives you on these longer term inflection points. So as we look at the data here on the Australian dollar, we talked yesterday about, there were some signs. Please snap back here. There were some signs that, this orange bar, we looked at it in the scanner. In fact, I'm going to pull this up and we go to my currencies. So as you see these yellow places peeling back, as you do on the ruble and on the 240s on the now on the Australian dollar, we had those happening on the daily, and we had them happening across the board on the 240s too the other day at the same time. So that was another sign, probably not the ripest short opportunity. So we kind of need to take those signs for what they're worth. But the economic kind of short squeeze fundamental news that came out today, I'm looking at this. We were afforded the opportunity to not be in the Australian dollar, taking off some P&L on the bottom of that run around 76.96. But it's really just a gift sometimes that they come out with this information and it kind of puts people on the wrong side, or that were on the wrong side, hanging on to things probably longer than they should have, having to cover, having to not give back 200 or 300 pips at a time. And what do we kind of base new decisions on? And this is our daily. This is a new profile that's in force today. I would love to see this thing. And if it doesn't happen, it doesn't happen. Right now, we're kind of in the balanced area, and it's a pretty wide profile. It would be super cool if this thing would rally back up into the 78.65 area to put on some more weight on the short side. And again, the good news is we know where the orient stops. So right now, it's kind of directionless. I mean, if this thing kind of peters back and falls down into the 76 area again, so be it. But we don't have a lot of things to hang on to here. And if you drill down to the shorter time frames, again, this was another of the telltale signs getting back above this unfair high on the 240s like we talked about yesterday, while at the same time the daily signal was flashing that we may have a new balanced area attempting to appear. Here's the 240s. So again, you can look at this as a sign to get back in the water on the short side below 77.40, rounded off. But, the better trade, in my opinion, is going to, be if this thing rallies back up into that daily unfair high. That's a new print up there, a new level, if you will. And we could just kind of rattle around here for a while. So not the ripest opportunity this second to step in on the Aussie dollar. I'd love to see it get some direction one way or the other. And that's the cool thing about those levels, is allows you to, in my opinion, just kind of sit on the sidelines sometimes and just kind of wait for the market to come to you. Now, going into the end, we've been above 125 here. We had that warning sign that happened during the day yesterday, and if you have the scanner, you're going to be able to kind of see this real time. So excuse me, I'm going to look at where's the end? There it is. Okay, so again, warning signs started happening, green with yellow peeling back, just like these guys up here. But now we're new balanced area, locked in. We're between 123.29 and 124.62, rounded off. Here's our landscape view. Here's that level, 124.61, rounded off, 123.29. So let's go back to, this is our daily on the yen. And if you've been watching the show, I've been super mega bullish on the yen since 101. It's 2,500 pips ago. And really looking for reasons to buy breakouts all along the way. But let's, kind of take this for what it's worth. We've got a kind of a resting period here, by way of that sign that started happening yesterday. And now you've got a new profile that you've got to deal with. Now, is this acting relatively bullish right now? Obviously, but you've got some headwinds ahead. New profile appearing, usually things will, statistically speaking, will have to settle out a little bit. And if you're kind of a day trader, again, this is not a long-term slant on this product, but you do have some inflection points here that you can kind of lean on. Do some contra trades against the long-term trade north. We've reached a high of 124.50, and those unfair highs are 124.61. So we've gotten very close to that. We may retest it. That may provide some contra short-term opportunities against the long-term trend up. But again, stepping back, this is the big picture on the end. Long-term traders, I don't think you've kind of seen the end of this. So that's the take on that. All right, let's get into the euro really quick, just because, again, these are the kind of the flavors of the day. If you watch Bloomberg, you hear a lot about currencies. And currencies, changes in currencies, big swings in currencies usually affect equities markets at some point. So here we go with the euro. We had this is our daily. We've had some reasons, i.e., new profile attempting to appear last week, locking in this week. And what do you do with this now? Now, in my opinion, you got to wait on this one too, and you got to wait until we possibly get into that 112.25 area. We've gotten very close to it yesterday, reached high of 111.94, but we haven't reached it. Kind of in a balanced area. Some ECB data coming out. It might have already come out, actually. And you've got to, you kind of got a little bit of a tug of war going on with some of the fundamentals in Europe right now, and some of the MOs that some of these members of the ECB and the guys who are, for lack of a better way of putting it, controlling the euro, want to see things pan out ultimately with. Here's the dollar. This is something, I'm still not convinced that it's even remotely close over for the dollar. 96.38. We talked about that as a leverage point yesterday. We came down and met it, and that's what stops are for. All the trades that we talk about do not work out. That's just almost statistically impossible when it comes to trading. Trading, our automated systems, we talked about this before. If they win 40% of the time, that's not the worst thing in the world. You want your risk reward scenarios to be paired up with these winning percentages. So if you're risking $3, risking $1 to make 3 every time, and you're winning 40% of the time, that math will work out in your favor, right? If you're winning 40% of the time and your risk-reward ratio is 1 to 1, that's not good. So when we talk about some of these trades, we talk about the stops, and we talk about taking the medicine, saying uncle. Now we've closed below. Some folks should have been stopped out of that. We're coming back up into that inflection point. Now, how do you deal with this? Here's the long-term weekly. Let me just kind of pull this up here. Again, you've got some previous support. Remember, profiles that are in the very near-term history have a very serious relevance when it comes, to trying to make decisions on the current profile. So these unfair lows at 95.47 that we've been talking about for a long time, guess where we hit yesterday? 95.68. So we got very close to that. We're rattling around here in a new fair auction. It's a little bit lower. It's the first, week of this new balanced area. And we're kind of coming back up into this area right here. So, are we supposed to head lower on the U.S. dollar right now? I think it's too early to tell. But the good news is, again, if you've got some short-term trading opportunities here that you can lever against, and I'm saying short-term around the 96.38 area, and you can play around with this. So, do I think the dollar's going to go higher? Yes, I do. Do I think it's a kind of a low percentage trade to start shorting this against those daily unfair lows? Yes, I do. I think the better trade, more than likely, and I'm going to pull up our 240s now. 96.45 on the 240s, top of the box. 96.38, bottom of the box on the daily. So what does that mean? That means that I'd like to see this thing get a daily close above that DMZ, as we like to call them, and then try to lever this on the long side. I'm not so convinced that this is going to, continue to head south. I may be wrong, but we want to get confirmations. A lot of people are saying, why are you going to buy something higher when you can buy it lower now? But really, in my opinion, you got to get a lot of confirmations on the technicals, and you just are kind of not in that scene down here below 96.38. When we come back from break, we're going to take a look at some grains, new crop beans, and we're going to take a look at silver and gold. We hadn't looked at silver and gold in a while because there's kind of been a no trade lately on some of the time frames that we wanted to look at those two products on. So we'll be right back, folks. You guys hang in there.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
It's hard to believe that it's been almost 2 years since Andy Hecht started his newsletter, the Technomental Commodity Report. In that time, he's delivered many winning trades for his subscribers. To commemorate Andy's 100th weekly issue of his newsletter, we're rolling back the monthly price to the introductory rate of only $59. This is a one-of-a-kind special that is only around until Thursday of this week, which is the day of his 100th issue. By taking advantage of this 100th issue special, you can lock in Andy's original introductory rate for as long as you remain a subscriber. That's an incredible 25% savings every month off the retail price. Andy delivers in-depth analysis of the commodity market every Thursday in each issue of the Technomental Commodity Report, while providing specific trading recommendations on ETFs and option positions within the commodity market. Don't miss out on this special, as there are only hours remaining. Sign up for the Technomental Commodity Report right now at the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show, and we're going to take a look at, let's just take a look at our futures here, and on our scanner we're going to take a look at, what's the 10-year down there like that? I don't know, it's out of place there, but corn, soybeans, wheat. This is these are old crop contracts. These are the front months here, July actually. So what we're going to do is we're going to go to our charts. We're going to look at new crop. We're going to look at, November soybeans and December wheat. November soybeans, December corn. Ooh. All right, we'll get that right in just a second. So let's take a look at corn first. Excuse me. 377, these weekly unfurlows, we're kind of coming back up into these. I'm a big fan. Some of these grains are going to continue to just fall. You don't know if we're going to break stride and get back into this balanced area on corn. We've kind of, come up pretty good ways down from the 440 area to, let's just kind of put that in perspective, 80 cents. We, over 15% pullback in corn, and actually close to 20. So inflection points to pay attention to, 377 on December corn, and I'm a big fan of just using those as they're provided and as they come up, as price action gravitates these inflection points. If that doesn't work out, I'm a big fan of hitting 391 on the short side if we rally that far. So here's the daily situation on corn. Talked about a new demand area attempting to appear yesterday. I was looking at this, and lo and behold, we have something. So, but remember, those weekly numbers kind of outpace the dailies, and I'm okay with shorting against that 377 right now. Let's take a look at November beans really quick before we get into the next break. This is something we kind of looked at this excuse me, continually from the short side, especially lately on this contract below 940, 942. It's provided some great situations. We kind of dipped our toe a little bit below $9 a bushel, and we always talk about letting the next level down, the 240s, kind of scale you out of this thing if that's going to be the case. Got above the stop area, 909, 910, and I don't know how much your appetite for risk is, but mine's not that great when it comes to trading grains. They can't get away from you. Here's a weekly situation, nothing to worry about here. So, what do you do with November beans now? I mean, in my opinion, and this is the daily situation, kind of had a full reversal here for a little while. I'm not a big fan of getting back in the water on the bean trade yet. I'd like to see this thing at least start getting back into the, here's the 913 area coupled with, I'd like to see it get back down below 907. I mean, beggars can't be choosers. I mean, we've got some opportunities below 913 and a half, but right now, I think it's kind of a no trade until we have a daily close back at least below 913 and preferably below 907 on the November bean trade. So that's kind of the way I'm looking at it. Let's take a look at July silver. And again, this is the silver chart. Just kind of hanging out down here. We talked about not spending a lot of mental capital on gold or silver lately. It's just kind of, we just haven't had the juice. Here's August on gold. Some opportunities down here, but I'm not exactly that convinced we're going to be directional whatsoever with this anytime soon. Seems like you wake up every day and some of the currencies are making some big moves. The indices are just kind of churning around. Most of them are kind of headed south. I was looking at the scanner today, and I'll get back to why this affects gold in a little bit. But I'm looking at our daily profile ranking system on our heat map. This is these are 16 globally watched indices, and we've got one hanging on by a thread here out of the three that are positive in the Shanghai. Just that's a whole different ballgame. Most of the world not looking that good, and that's relatively anti-inflationary. And then gold's kind of sitting here, just can't get out of its own way. You do have some inflection points at 1187 on the weekly, up top at 1241. But I think I'm alongside gold. We'll get into silver in just a second. You've got to get back above 1205. I'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, You'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were finishing up with silver here. Let's just get back into that really quick. I've got my screen all messed up here. A little bit of action on the real-time scene right now. Silver kind of selling off. Again, it's kind of more okay to be short, not okay to be long. Just looking at the generalities of silver right now. Stops above 16.95 on this trade. But again, we've been talking about gold and silver, just not a lot of direction to it. Not a lot of global inflation worries, without question. Here's the 240s, 1669, 1670 sitting there. Again, I'm just kind of a fan of sitting on the sidelines with both of these metals right now. Just kind of trying to see if these things will settle out a little bit one way or the other before we get any serious signs on how to trade gold or silver from the long side or short side. Let's take a look at the S&Ps really quick, and then we're going to get to the scanner and try to figure out how to attack this animal. I'm really almost astounded that this market continues to kind of drift, I guess, more towards the north side than the south side here. Because, when I look at the breadth situation, I'm going to reset my sorting there. I'm going to go into my indices. And we looked at this a little earlier, and I know pre-market we're up 10 S&P, so you're going to have some numbers flipping around here. But as we look at this and we move into looking at our breadth charts, 175 stocks in the S&P trading below profiles. 79 stocks trading above. That's just ridiculously inverted relative to what the market's really been doing. So when I look at something like that, I want to kind of drill down into, just by clicking on the heat map grid there, go into stocks that are not cooperating. And in my opinion, you've got some really, really good short opportunities. We've been talking about these short opportunities for a while, based on the breadth being a little funky. We're going to have some speed dials flip around this morning, by the way. We're up 10 S&Ps, as we just said. But there are some really, really good short stock opportunities here. And, we're just going to kind of go through a couple of these little candidates, I guess, if you will. We're going to tell you what we're going to do. We're going to pick out the real crap here. We're going to go both weekly and daily. Procter & Gamble, I want to pull this one up. PG, this is trading below profiles. We've got, let's see, Union Pacific, UMP, just eternally on the list. Whole Foods Markets, Wynn Resorts, a lot of problems over in Asia with Wynn Resorts. I hear about those every day over here. So let's take a look at Procter & Gamble really quick. Starting to sound like Froggy on Little Rascals. You guys ever watch that? I feel like I'm talking like Froggy now. Here we go. I can't believe I remembered that. Here we go. 79.67. New stops oriented above there on Procter & Gamble. Here we go. Let's see if we can get this to reform here. Excuse me. 79.50 unfair lows on the daily. 79.67 on the unfair lows on the weekly. So that's kind of where you more than likely have to say uncle in this trade. Things on our lows go lower, guys. Things on our highs go higher. We're going to take a look at WF. Let's see. I'm sorry, I typed in the wrong symbol here. WFM, I'm sorry. WFM. We typed in WFC, my most hated banking institution ever. Here we go. The weekly Whole Foods Markets. Now, this has been on our list without question. And, it's somebody told me a long time ago that successful trading is supposed to be boring, and I've tried to always keep that in mind. And we're going to pull up our daily here. So the daily on WFM, Whole Foods Markets. I'm having trouble talking today. 41.83 is going to have to be where stops are oriented above now. And this stock has obviously been taking it on the chin. We've been talking about this not being on sale, and now you've got a new leg down. And there's, this stock could go to $20. I mean, we were 50, 60 bucks a month or two ago, and again, showing its hand. It's not on sale. Breaking below profiles again. You got to take it for what it's worth. Keep turning the rents the same way. I know that's easy for me to say these things, but we're trying to find stocks and instruments that will be the least painful. If the market just bolts and starts, the S&Ps end up at 2,200 tomorrow. The stocks that are weak are not the stocks that are a lot of people are clamoring to buy. Those are the ones there's something wrong with the stocks. So this is another one, Union Pacific. I mean, I know this is a pretty big safe landing area here to put stops above, but 106.13 weekly unfair lows and daily unfair lows at 106.66. So that DMZ up there, there's nothing attempting to appear down here on UMP, and you've also got, the 240s kind of regulating the trade. You might want to give yourself a little bit of a more generous stop with UMP and not get shaken out of it. If and some new inflection points appear, this may be something to step on the gas with, actually. Now, this is another one that's kind of been on the radar screen continually. PBI, Pitney Bowes. I didn't look in the den. Buckwheat. I don't know if you guys remember the Eddie Murphy skit on Saturday Night Live. I'm sure you've seen it. That was hilarious. Okay, so PBI, again, getting below profiles here. 22.41 stops above there. and 22.25 weekly. So you got a little bit of a DMZ there on Pitney Bowes. Again, things on the lows go lower. We're not trying to find things on sale, obviously, with these conversations. We're hoping that the market will ultimately find itself in this disconnect with the Brett situation, not cooperating as the market's kind of drifting higher, and the market will come down, and then these stocks already showing their hand will fall apart a little easier than some of the stocks that are hanging in there. That's the theory here. We're going to take a look at NSC. This is another one that's been on the radar screen, Norfolk Southern, NSC. Here we go. And the thing I like about this scanner, it just kind of can run your trading day for you. You know, I mean, it picks out opportunities. If I want to go in here, and let's just say I want to find stocks that are sitting on the bottom of profiles, I want to kind of no sort there. You got a lot of stocks that are sitting on the precipice, the cliff, if you will, in an intermediate time frame that could give it up relatively quick. And you can take just a quick view at some of these instruments, UPS, Walmart sitting on the fence again. We're going to look at that in a second after we look at NSC. So here's NSC. This is one that's pretty far in the hole. I will admit that. There's nothing to hang on to here. You're going to have to use the 240s on this. Those inflection points are provided in the scanner, and you hope you get a rally back up at 95.25 to 96. That's your collection area. Can't do anything with this right now. That was right off the scanner. Quick analysis there. Let's take a look at Walmart. Okay, now, excuse me. No mystery here. We've been beating the table about this one on the short side, and it's just worked out perfectly. But now, guess what? You got a new demand area that happened yesterday. Now, let me see where we're at this morning. 74.93. Okay, so we're kind of coming up off of these lows. New profile. This is not the time to short this. All right, so again, picked it out of the scanner. Sitting on profile lows was the reason it came on the radar screen. Let me point this out. There's Walmart. There's our landscape view. There's the level of the marketplace. The only way we'd want to look at this now as the short side again is if we eclipse 74.39, have a daily close, which seems like we're bouncing a little bit this morning, a little bit market sympathy bounce, or we rally back up into 76.50. Those are the real simple black and white plays that you want to pay attention to on Walmart. Now, if you have been short and you've got this new demand area that has kind of locked in here, this new balanced area, and you had that yellow, let's see, when was this? Monday? Yeah, Monday you had this orange bar appear. That was a telltale sign that you may be in a target-rich environment on the short side, and you need to pay attention to that. Those are quickly delivered in the scanner. So when you see these, and in fact, I can just, again, do another cool sort here. I can come in and I can say, you know, we're new box on weeklies. Boom. Wow. There we go. So we're showing new boxes attempting to appear either on the upside or downside on certain instruments, and finding those on a long-term basis, and it's saying, hey, long-term trend may be in danger. So I'm going to go over here to Accenture. I'm going to hit task says, oh, wow, long-term. Caution the longs. Targets may have been met in the interim, and trading range could be developed. So, again, it's just a little bit more Betty Crocker version, looking at the. Did I say Betty Crocker? If you click on the Taz says over here, you'll get the Betty Crocker version, the recipe, if you will. Oh, I'm off. Anyway. Let's go back to no sort. Let's reset the sorting. And let's go the Duncan Hines version. Here we go. As we go back into the sorts, let's just kind of go back to what we were looking at. Let's go back to below the box here on the dailies. And let's try to find some more opportunities. Chipotle, let's just take a look at that one. EMG. And this is an ugly little situation. Ooh. Woo-hoo. CMG. By the way, I've got Ronnie Cosman sitting next to me tonight. He's our lawyer here in the Philippines. I call him Dr. No. I always come up with the craziest ideas, and he's very good at saying no. It's right over here to my right. Here we go. CMG. 617.78. That's the inflection point. That's where we had the close below. And again, this is a little massive volatility action here. I don't have to tell you that. Had the orange bar, had the new profile appear. This is super mega bearish now. You get the massive reversal. This was the sign, the orange in the scanner telling you it's not okay to stay on the short side. And we always talk about this case in point. Let's get back up into 637, or let's get back below 617. 617 close below, go back and retest, and now it's an ugly situation. That could get uglier. Here's the 240s. Not a big fan of this one. Here's the weeklies, CMG, and see how clear-cut some of these signals were. I mean, you get the scanner. You know the inflection points. I'm gonna mouse over Chipotle. There's the ones we just looked at. Here's more. Boom. Here's more. Landscape view. See all the inflection points at one time. Let's move on. You know, there's some household names on here. Ford Motor Company. I'm going to take a look a little bit farther down here because we don't have much time left before the break. Johnson & Johnson. I mean, this, you know, let's take a look at that one. And again, we're trying to find stocks that are showing relative weakness. And this thing is just an idea buffet. And we just, you know, I know you guys, a lot of you guys are looking at U.S. stocks. I mean, you literally can load up multiple indices in here at the same time and just do sorts galore. So, you know, we did put the Saudi Arabian exchange in there. I know you guys, it's only open 4 hours a day. I didn't even know that until we started looking at it. There's guys sitting around playing cards in the pit down there, I guess. But anyway, you know, you can go into the FTSE, the DAX, Thai Set 100. There's some really cool trading stocks in the Set 100 if you've never looked at it. Some great action there, actually. So as we look at this, I'm going to go back to our S&Ps, have that up, and I'm going to pull up Johnson & Johnson. Here we go with Johnson & Johnson. Okay, so got about 7 seconds here. We're going to save this till right after the break, come back, talk about Johnson & Johnson and a couple more things that are on my radar screen for this week.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, before we hit Johnson & Johnson, I'm going to look at the XBI. Somebody sent me an email about it, and I forgot about that. And they were asking, is this a good short at this stage? And, you know, at some point, everything can be a good short, I guess. But you want, in my opinion, to have a good technically ripe environment to start laying the wood on the short side and have something to lean against, put the stops in force and all that kind of jazz. And as I'm looking at the XBI and just the name itself, the biotech ETF, blah, blah, blah. I mean, I'm looking at the healthcare sector, the XLV. Here's the daily, here's the weekly. This is top ranked stuff on the heat map. And I'm looking at this XBI. We're above our daily profiles. We're above our weekly profiles. Things on their highs go higher, guys. I mean, you want some confirmation. You want to get below the 233.50 area. And it may start, you know, showing the ability to come off. But right now, there's nothing to lean on up here. And I'd rather see it get back down and have a weekly close below 233.5, and then start looking at the 240s and the dailies to kind of, you know, mitigate the circumstance on the upside and the downside. So that's my take on the XBI. So you know, again, these are pretty simplistic black and white shots at how to trade. You know, I've had 100 things on my screen at the same time before, and you know, sometimes it allows you to not even pull the trigger, and then you got 13 of them doing this and 78 of them doing this, and you know, it's just, you're all screwed up in the head. I personally love to see market profile used in a very rules-based objective environment, and I just use a couple of things now, and it just, you know, levels help me, and that's just made my life a little bit easier when it comes to managing the bet, so to speak. So here's Johnson & Johnson. We go back to this thing. Not a fan of this stock on the long side by any means. It's been something that's just, here's the 102.34. We had a pretty big move 2 weeks ago, got back, never closed above there. That's what stops are for, though, guys, by the way. Couple of targets down here, 98.58. I'd love to see the broad market come off, and I think this thing could show itself, maybe another 10 to 15 points on Johnson & Johnson. Here's kind of, the technical environment right now. 102, you can play stops above there on the immediate kind of stop scene situation. Again, not a big fan of this stock fundamentally or technically right now. Scanner kind of threw it out there. Let's get back to the scanner. Let's go. Let's look at CSX. That was one we had before because we don't have a lot of time left. Excuse me. Woo. Not a good scene here. Norfolk Southern, CSX Corp. Same kind of situation in the scanner. 34.88. Let's just call it 35 stops above, and I think you just walk away from this one. And you got some targets down here at 32. So again, you could put some OCO orders in. I think there's some more downside on CSX. All right, and we're going to take a look at one more. That wasn't the one I wanted to pull up, but I think that was the one on the list. No, it's not. I'm sorry, guys. But we got about 5 seconds. I was going to pull up Wynn Resorts. I typed in the symbol wrong. Larry Pezzavento's next. If you've never listened to him, you need to stick around and check him out. He's one of the best hosts on TFNN Network. All the hosts on the TFNN Network are seasoned veterans, and I think you can grab a lot from these guys. Hang around.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.